Yes, Mr. Rao, we can start.
Yeah, thank you, Amrinder ji. Very good morning, good afternoon, and good evening, distinguished participants, ladies and gentlemen, friends, and CMS. I am NVB Chalapati Rao, qualified cost and management accountant, and currently I am a senior vice president of Indian Society of Management Accountants. So I'll be the moderator of today's webinar. I'm pleased to welcome all of you to the webinar on SAP Business One overview on asset accounting. Last 2 months, we have conducted 2 webinars on SAP B1 overview on financial accounting and SAP B1 overview on cost accounting. So this is the third web series of the SAP Business One, where we are conducting the webinar on asset modules. Okay. So the objective of this program is to make the CMAs and the finance professionals aware of this SAP Business One, which is a complete set of accounting and financial tools that provide a clear visibility to the business and greater control over financial operations in general, and help and in particular it will be helping you in managing and monitoring the fixed assets. This will help the business move forward and compete effectively in this digital age. This webinar will enrich your knowledge and enable you to take better financial decisions with more insights. Today's webinar will be for 1.5 hours, which includes presentation by our eminent speaker Dilip ji, okay, followed by question and answers, which will be handled by myself, and vote of thanks and concluding remarks by CMA Dr. Amrendra Kumarji, who is the Honorary President of Indian Society of Management Accountants. Ladies and gentlemen, I believe that by participating in this webinar, we are at the right place at the right time. Together, let's accelerate the exchange of the ideas and scale up good practices. On behalf of ISMA, I wish you all very successful webinar. Let me introduce you to all of you, the eminent speaker of today's webinar, Mr. Dilip Saad, who is a professor from Indiana University, USA. Mr. Dilip is the president of Kabir Consulting Inc., Kabir India, and Kabir subsidiaries in Nigeria, Bangladesh, Philippines, and Kenya. He was an associate partner at IBM in USA. He worked as a senior director with Accenture and Capgemini in New York, USA. He has been working in SAP across the globe since 1998. Mr. Dilip is on the advisory board of Small Business Development Center SBDC, SB entity in New Jersey, USA. He is also the chairman of the IT panel of MSME appointed by Government of India. He has been a visiting faculty to various universities across the globe. He has written several papers on SCM topics and provided business process improving consultancy to more than 400 clients across the globe. Mr. Dilip taught more than 5,000 students in SAP and IT. Mr. Dilip holds a bachelor's degree in mechanical engineering. Okay, so this was a brief about Dilip ji. Before I request Dilip ji to make a presentation, I would like to quote one of our sayings of our great president, Dr. Abdul Kalam ji, where he mentioned that learning gives creativity. Creativity leads to thinking. Thinking provides knowledge. Knowledge makes up great. This is a quote, a great quote from our president. We are really blessed, friends, that we have such an eminent personality like Dilip ji, who is, taking out his valuable time and spending with us. This is sort of a some sort of a knowledge sharing activity which he is doing. We are very thankful to you, Dilip ji. Now I will not take much of your time. Over to you, Dilip ji.
Thank you very much for your introduction, and thank you also arranging these knowledge sharing. I cannot agree more. Knowledge is the fundamental factor of any change in any way, at the individual level, social level, and whatever corporate level. So knowledge is the key. Now, and that's the reason I teach actually. So coming back to, let me share my screen. If you can, yeah, so let me see. Okay, so I think my screen should be visible now. So what we're going to do today, we're going to talk about fixed assets. In our prior discussions before this, we had two sessions, one on financial accounting, and the second one we did was on cost accounting, and today is on the fixed assets. So in SAP Business One, it allows us to maintain the entire asset lifecycle. So what we're going to do as much as time possible, try to go to the different aspect of asset accounting, taking some simple example. We'll talk in theory also, and we will do some exercise as well. So this session would be the combination of conceptual theoretical aspect of asset accounting and also looking at some of the transactions in the SAP system. As I always do, the same pattern would be followed today also. So at the end of this topic, you will be able to explain the process of managing fixed asset items. And some of the terms, some of the concepts which are there in fixed assets, we shall be able to use from the SAP perspective. All of you are accounting, financials, and experts in different areas. So you understand what financial and fixed asset is. My perspective is more from the SAP point of view. How do we do that? Manage lifecycle. So whenever I teach, I always like to put a business scenario. Because at the end of the day, SAP Business One is a business application. Therefore, connecting it to a business situation is the most important thing to do. So here in our example, we will take an example of a truck. So we have an office truck, which is being used for the purpose of delivery. And we will be using this as an example of the fixed asset and taking to its life cycle. So how can we option to manage, monitor truck's value over lifetime of this asset? So that is the solution, and that is the cycle, and that is the process, that is the business scenario we will be discussing today. So identifying asset to the different aspects of the asset lifecycle. Enabling fixed asset solution. So in SAP BW, you have a choice, which basically means if you want to enable fixed asset, you can do. If you don't want, that is also possible. Nowadays, obviously, any company, every company will always have some kind of fixed asset. But if in case some companies say, oh, I don't want to do it now, we'll do it later on, that's not priority, or different reasons. So you still have a choice of making it on or off. So that is basically, we have an administration, system initialization, company detail, basic initialization, and then we check enable fixed asset box where fixed asset can be enabled. So what happens is in SAP Business One, so there's administration where a lot of these things can be enabled or disabled, and their different aspects can be defined. So here we have a enable fixed asset. Now, when we are enabling fixed asset, then there is also calculate. So do we want to calculate by a month? This is what mostly people do. So when we are they calculate depreciation by a month. Day normally is not being done. Then there is also certain setup for the fixed assets. Now, what are those setups which we can do to enable the life cycle of fixed assets. So there are different aspects. So if you see in the fixed asset, there is account determination. Account determination, basically, we will see the process. So different accounts get updated during the life cycle of fixed asset. Which account? There might be different account in case of different asset classes. You can have many different type of asset classes. And for each asset class, you might have different GL accounts, which get updated during the process of entire asset life cycle, like capitalization to retirement. So here there's a account determination setup in which what SAP allows you to do that, okay, if I have a plant and machine, these are my accounts for your asset balance sheet account, for acquisition clearing account, for revaluation account, for ordinary depreciation, for various other net value numbers. If I'm doing my motor vehicles, then these are my accounts. So that basically means my plant and machinery can reflect their values and their GL updates into different general ledgers. In case of motor vehicles, we can have a different accounts. So that is why there is a account determination process, and for each account determination process, so motor vehicles, these are different accounts. If I'm doing my other vehicles, if I'm doing my furnitures, these are my account. If I'm doing my plant machinery, these are my account. My building, these are my accounts. So the first and foremost, there is account determination, which you can define. There are different depreciation type. So now, what kind of depreciation method we want to use? So if you see here, these are the different depreciation method. A lot of people do use a straight line, but we have a choice of a different depreciation method which we can utilize based upon our requirement for different type of asset and different type of asset classes. A straight line in most cases happen to be most prominently being used. So you can define different asset depreciation type. You can link them to different asset depreciation methods. So here we have motor vehicle, and then we are using a motor vehicle straight line. This is assigned to straight line. This is doing calculation on a monthly basis. And when you're doing the calculation method, so that basically you have acquisition value divided by total useful life. So if I have a 10 lakhs value, and if I have a total use life 10 years, so I can calculate my method on the straight line. Simple arithmetic. So we can define all of them. After that, there is also depreciation area. Depreciation area is more of an accounting area. So where you want to do depreciation for different regions. So this is the main books. And then if you want to do some internal depreciation related to FRIs or many other accounting principles. So apart from one main depreciation, if you want to have alternative depreciation also, that you can define as a part of depreciation areas. And then there are different asset classes. So you can have a different asset classes, and as many different asset classes we want, we can define. So let's say we are taking an example of a motor vehicle. We can define this is a motor vehicle, and this motor vehicle is depreciation area is main books. This is the account determination which we're going to use. So that basically means when we are using asset classes of motor vehicle, then account determination process would be fixed asset motors. The depreciation type is this, and the useful life is 72 months. This is just an example. This could be whatever we want to define. So by default, asset classes in this group would have 72 months of useful life. Now, this is the asset class setup of motor vehicle. We can have as many as asset classes as possible. It's a 10-digit code, so you can have thousands and thousands of asset class if so needed. Asset class is one of important parameter because asset class is the one which is linking different aspects. Asset class is also linking with my depreciation type, which we talked about that, okay, this depreciation type is going to be straight line. So it is also connecting your asset class to what kind of a depreciation we're going to use. So in our example, we took a straight line. And it is also having a default useful life, 72 months. So all motor vehicle in this category, you can change it, but that is the default. These are the pre-setup of the different assets which you can do. That is what we are seeing here, defining different asset configuration. So different asset classes you can define, different depreciation method you can define. You want to use straight line, what is going to default, your useful life, 72 months, 60 months, or whatever month. So you can define all of them. You obviously can change as you want. Now, if you look at it, the asset life cycle, then in SAP, this is the asset life cycle in SAP Business One. So first and foremost, you define an asset master data. So asset is a master data. It's like you have a customer master, you have a vendor master, you have a bank master, you have an item master. Similarly, asset is also in SAP is considered as a master data. So all different assets which we have, all the different vehicles, all the different equipments, all different machines, all different asset classes which we have in the system, all of them will have asset master data. We will be creating our asset master data also. Then asset master data is assigned to fixed item type called fixed asset, item type, fixed asset. So that is a categorization of that item. So this item is of a fixed asset. You have a different type of item. You have maintenance item, repair item, operation item, service item, packaging item, finished goods, raw material, maintenance, and semi-finished. So numerous different type of items. These items are of fixed asset. So that is how SAP classify these machines, these equipments, these vehicles, these motors, these buildings, and other asset classes as a fixed asset. We will also create fixed asset master data in the system also. Then after the definition, then there is something called issue of AP invoice. AP invoice basically means when we are purchasing that asset, for example. So if I'm purchasing that asset, then system creates something called capitalization document. We're going to do that exercise also. So with that capitalization document, then our assets get capitalized. So here in SAP, if I go to my finance accounting and fixed asset. So here we have a asset master data. So that is the one. So we can create different kind of assets, which we're going to do. Then after that, there is a capitalization. So you can do capitalization document. System can create capitalization document automatically, or we can create manually. Automatically basically means that, okay, I purchase an asset, I purchase a machine, I purchase a vehicle, and the moment I post in a vendor invoice for this asset, it get automatically capitalized. Or we say we are not going to do automatic capitalization, we will do subsequently later on. So we have a choice. Then capitalization credit memo. So we can buy and we can bring asset value, you can do credit. there is a retirement of asset. So you can retire this asset. You can retire it by selling it to a particular customer, because at the end of useful life, it might have something remaining value, and then you can do selling also if you want, or you can scrap it, that this asset cannot be sold, nothing is left, so you can also scrap. So you can sell it also, you can scrap it also. We will see that as well. Then there is also, apart from the retirement, then there is a transfer. Transfer basically means that, okay, you're transferring this asset from one asset to another asset, one location to another location. So then there is a asset transfer process where you can transfer different assets. Then there is a depreciation. You can do depreciation manually. There you can put asset number, description, total value, and you can do asset manual depreciation. Then there is also here asset depreciation run. Depreciation run basically means where you can run your depreciation automatically. So that is where we have a depreciation run. So you can run depreciation manually as per your choice, or you can run automatically. Then you can do asset revaluation. Revaluation basically means that some point of time, this machine is supposed to be, for example, like we take an example of motor vehicle. Now this motor vehicle has a 72-month, which is 5 years or 6 years useful life. But then this vehicle got into accident. So this asset value got drastically changed, positive change or negative change. So asset revaluation will allow me to manually change the value of that asset for various reasons. Then fiscal year change, so like which fiscal year we are talking about. So okay, we are in the fiscal year number this, which fiscal year, so we are in fiscal year 2022. Currently we are in which fiscal year. Then we also have a different fixed asset report where you can talk about asset history, asset report, asset transactions. Now coming back to, so these are some of the functions, and that is what we see here on our screen. So definition, activation means capitalization. Capitalization can be done manually or automatically. We can run depreciation, we can run manually or automatically, where you can post your planned depreciation cost. You can do your adjustments, where we talk about asset transfer. You can asset revaluation. You can do appreciation of value. You can do depreciation of value, or you can drastically change the value. For example, your motor vehicle has been totaled out, has gone an accident, and then value has to be changed drastically. So you can change that also. And in the last, you have a AR invoice, in which you can do retirement. We saw retirement also. In the retirement, you can do the selling of asset to the customer, or you can also basically do something called scrapping of asset as well. So you can do both. So asset life cycle terminology. So let's say useful life is there, it's 20 months. Capitalization, acquisition, production cost, asset value. When asset value start, depreciation. So if it is 6,000 is the total cost of an asset, 3 years is the useful life. Depreciation is 2,000 a year, and net value after 1 year left is 4,000, based upon a straight line method. So with total 6 lakh, this is a calculation, we're going to see that also. When we do the retirement, value become 0, is retired. Fixed asset depreciation. So in SAP, we can create different type of asset. So you can have a asset master data. So if I go to the asset type, item type asset. So I talk about different type of items could be there in the system in SAP. Fixed asset is one of item type. Apart from the fixed asset item type, you can have a finished goods, raw material, semi-finished, maintenance item, repair item, operation item, service item, packaging item. So many different type of items can be maintained in SAP. One of item type is the fixed asset. We'll see that in the system also. So when we are defining a truck, so that truck is basically is an item type. Then the truck is also assigned to asset class. So we look at the asset class also. We can define as many different asset classes as we want. So many different type of asset classes we can define. They're linked to depreciation area, account determination, depreciation type. So now let me go to asset master. So this is the asset master. And if we go here, so there are different assets which are here, different. And let us say I want to create a new asset. So I go to change mode, and here I want to create a new asset, AS08, and I want it called delivery. So I'm creating a truck, and then item type. This is what we're talking about. Item type. Item type is a fixed asset. Then we have an item group. You can define different type of item groups also. So within the fixed asset, you can have a group: large truck, small truck, delivery truck, office truck. So there is a item type, item group. Group is basically grouping your asset further in for the reporting. We say truck, okay, truck can have a different types. 6-foot truck, 3-foot truck, this truck, delivery truck. So different type of trucks you can have. So that is where we have a item type. Now here you can define unit of measure. You can see sales data. You can have inventory data. Now here we have a fixed asset. Now on the top, there is something called item type. Now we see here, there are 4 categories. One of them is an inventory item. So this is gray out because it's not inventory item. It's a fixed asset. So it's gray out. Sales item, if I want to sell it, so I can keep it. So maybe I end up selling the asset, so I can create a sales. Purchase, I maybe end up buying the purchase by the asset. So that I can do the purchase also. We can do sales and we can do purchase. Then here we have this is the asset information. When we see the asset information, the status is new, and then we go to asset class. So what kind of asset class we want? So we say this asset class is could be furniture, plant machinery, motor vehicle, or whatever. So we can decide which class we want. So we want the class motor vehicle. Now, when we select the class motor vehicle, it takes useful life 72 months, because that is what we have defined there. So it takes 72 months as useful life. Then it takes a depreciation method, which is a straight line, because that is what we define to this asset class. It defaults. And now, if I want to change it from 72 months to whatever, I can change it. Not every vehicle can have a 72 month. This vehicle might have more or less, but 72 month is default. Is getting default because in the configuration we have defaulted 72 month. Then we have asset group. So what kind of we can define asset? So within the class you have a group. You can also have a item group, depreciation group if you want to. Then here we have an inventory number. Inventory number basically means if I want to keep this asset in my inventory and do the inventory management for that, you can also link this asset master data to inventory number. Here you can also link it to serial number. If you're buying a machine or equipment or vehicle, that vehicle may have a serial number. So for the unique identification of this machine, this equipment, this vehicle, I can also associate it with a serial number. Then we can also link to locations where it is Bangalore, Delhi, Kolkata. Which technician, if it is subject to some kind of a technician, so who the technician is. If we want to assign it to some particular employee who will be taking care of it, we can assign to an employee. Capitalization date. So if I have a fixed date on which I want to capitalize, I want to capitalize it today, or I want to capitalize this after 6 months, 3 months, 2 months, I can put capitalization date. We are not putting any date. Right now, if you see this, all these values, 0, 0, 0, 0, 0, 0, 0, because this asset has not been purchased, this asset has not been capitalized, we have no idea what is the total overall value would be here. Then we go to value here. So here in the value also, acquisition value, retirement, transfer, write-off, ordinary depreciation, unplanned depreciation, special depreciation, and everything is 0, 0, 0, 0, 0. Because this asset has not been purchased, capitalized yet. Depreciation, everything is blank because we have not run the depreciation, obviously. We can also link it to the cost accounting, so project assignment. Project assignment basically means that this asset might be linked to a particular project. In SAP, there is a project also. In the project, you can do project accounting as well. You can create your P&L by a project. You can create a P&L by company, but sometime you have a project. I will give an examples. We have a company who does the solar energy projects. And because they do all these different engineering projects, so for them, every project is a cost object. So they do P&L by a project. So in SAP, you can do P&L by a project. So you can assign project also. So that basically means the cost of this machine and equipment can be assigned to this project also. You can assign this depreciation rule as well. Depreciation rule is basically, we talked about that distribution rule basically that related to cost center. So if you want to assign particular distribution rule, you can assign that rule as well. And then we have attributes. If you want to define any attribute to this item master data apart from them, and then we add. So see the message in the bottom, AS08 created successfully. So basically, we are able to create an asset master data. And now if I want to go to asset, and if I want to check this asset in the drop down, so now I have a new asset, and that asset is called AS08. It is item description asset, in stock 0, and the item group is asset. So asset has been created. So we created an asset master data. Now, after creating asset master data, the next is the fixed asset activation. So we created as asset master, but this asset is not yet activated. This asset is not yet capitalized. So how can we capitalize? So see this AP invoice. AP invoice basically means vendor invoice. So when we purchase this asset, so that is one of the ways to capitalize is that when we purchase this asset, at that time when we create an AP invoice or vendor invoice, and with that we can create a capitalization automatically also. Okay, let's do that. So let's do the purchasing of this asset. So now I come out of the fixed asset cycle, then I go to purchasing, and let's say I'm creating a purchase order, and I select any vendor, whatever. Then here I select my asset, which is truck. So I entering my asset, entering one quantity. What is the price? So let's say I'm purchasing this truck from 6 lakh rupees. So I put it 6 lakh. So we are purchasing this truck, one quantity, could be two quantity, whatever quantity we want, for 6 lakh. This is the asset AS08. Now, if you go back here, we click on it. So purchase order got created. See the message in the bottom, operation completed successfully. So we are able to create a purchase order. After creating purchase order, the next thing is, if you see copy to, so we can create a GRPO, means good receipt. So now we are doing good receipt. So that this truck actually, we are acknowledging the receipt of it. Okay. So now we are acknowledging the receipt of this truck. We create a PO, we given the PO for this truck to the supplier, and after a certain period, this truck is being delivered. When this truck comes to our warehouse, to our store, our plant, then we create a good receipt against purchase order. We save it and we say yes. So we are able to create operation successfully. So here we have a good receipt we have done. After good receipt, then vendor comes back to us and say, okay, you asked me this truck and we delivered this truck to you. And now we wanted to create a vendor invoice. And vendor is submitting his this invoice. Now here we go to copy to. In the copy to, we have an AP invoice or vendor invoice. Now we are creating vendor invoice. So vendor, the supplier of the truck, is giving me, there is a vendor number, name, item number, AS08 is a truck, unit price 6 lakhs. And after that we add and we save. So now, see the message in the bottom, operation completed successfully. We are able to post an invoice for vendor also. Now we go back. And after that, we go to relationship maps. There is something called relationship map. Now see the relationship map, that is what we have done. So we create a purchase order. This is the purchase order number, date, amount, which is September 18th. This is the amount. Then again, this purchase order, we create a good receipt against PO. So that is the GRPO 689, 918.22, and this is the amount. Then we create a vendor invoice, AP invoice. AP invoice is open because we have acknowledged the invoice of the vendor, but we have not made the payment yet. And this is the amount, including tax. Now there is a capitalization document. So this is an example of an automatic creation of the capitalization document when we post the vendor invoice. So this capitalization document has been document number 10. This is created on September 18th and amount is 6 lakhs. So the purchase price of this particular truck was 6 lakhs. So it create this for 6 lakhs. Double click on it. So this is my capitalization document, origin from this document, happen on this date, posting date, asset number is AS08. This is truck. The value is 6 lakhs. So this truck is of 6 lakh. If I go to accounting, then my depreciation area is main books. And if I right click here, then there is a journal entry. Because we talked about account determination. If I go to journal entry here, then this is what we see. So this is my account 11300 motor vehicles. So this account, and if I go back to this account, I can see this account. This is a motor vehicle account we have created as a part of my tangible assets. So this account, motor vehicle, has been debited for 6 lakhs. And the acquisition clearing account has been credited. So this is automatic creation of account, updating the GL automatically at the time of capitalization of assets. If I go to my vendor invoice, and if I see here my journal entry, so Acme Associate, which is my vendor, is got credited was 6,24,000. 6 lakhs is purchase value and 24,000 is my tax. And then acquisition clearing account has been debited. So this is just a clearing account. This get debited at the time of invoice, get credited at the time of capitalization, and it ultimately nullifies. But because we have purchased this asset from this supplier Acme Associates, we are credited for 6,24,000, including tax. We need to pay this amount to the customer, to the supplier. Now, if I go to the GR invoice here, in the GR invoice, there is no journal entry. When we talk about financial accounting, the very first class, at that time when we do the good receipt for an item, and when I do the good receipt for the first item, it debits my asset value. It debits my inventory account. When I purchase my raw material or any material, for example, it debits my raw material account for. But there is no raw material account here because this is not a raw material. This is an asset. So although there is a good receipt, but there is no update to any inventory account. Although there is an update to when in AP, and there is a capitalization document. After this capitalization document has been purchased, has been capitalized. Now I want to go to my financial accounting. I want to go to my fixed assets. I want to go to asset master. In the asset master, I want to see the asset which is AS0, which is truck. So now I want to go to my asset master data. I go to fixed asset. Now here, this asset is active. So it has been capitalized. Now capitalization date is 9/18 today, because we purchased this today. So capitalization date has been activated today, which is September 18th. Now here acquisition value is 6 lakhs. Now we have, if you see here, there is acquisition and production cost. So because we have done the example of a purchasing an asset, it is also possible that this asset we are producing. So there could be production scenario also. We have taken the purchase scenario that we are buying this truck from outside. That's one scenario. There could be production also. So there is a 6 lakhs. Net book value is $5,41,669 rupees. Okay. How does this coming? There is a useful life is 72 months, which we see. Then I go to values here. So in the value, system tells me my acquisition value is 6 lakhs. And at the end of year, it will be 5,83,000. Net book value would be 5,41,000. Means at the end of this fiscal year. Here, if I see my depreciation, so these are the planned depreciation value. This is posted depreciation value. This is automatic depreciation, manual depreciation. So we can do depreciation either way. Posted is all 000 because we have not posted any depreciation yet. Planned depreciation is this. So here, the first period 0, second period 0, third period 0, fourth period is 0, fifth period 0. Now 6, 7, 8, 9, 10, 11, 12. There is a 8,03,000, 8,000, 3,000 every month because we have monthly depreciation. Now, how the system is calculating this 8,333? So if I go to my calculator, and the calculator, if I see my 6 lakh and divided by 72, it comes out to be 8,333 every month. So that is why it is saying 8,333 every month. But because this is already September, so period is starting from April 1st. So April, May, June, July, August. So 5 months has gone past. So that is why the first 5 months, it is all 000. And then we are left with the remaining 7 months. So 1, 2, 3, 4, 5, 6, 7. So September, October, November, December, till next year, March 31st. And then every month we have 8,033. And that is my total amount. Planned depreciation this year is 58,333, which is the cumulative sum of all these different accounts. And then when we say 58,000, and that is where we are left with this amount at the end of it. And then we have a cost accounting. This we have not assigned any cost accounting. That is how system calculate the different depreciation. Then we close this. That is what we see in capitalization. And then this is what we see, fixed asset depreciation in the fixed asset master data. We can do depreciation run. So when we go to depreciation run here, for example, and if I go to preview, then here in the preview, system tells me that the asset class that on this date on September 30th, so for the month of September, posting date is September 30th because end of the month. Asset class is MB, motor vehicles. Asset number is AS08, which we created today. It's called truck. And the ordinary depreciation for this truck is 8,333. So this is the amount which is supposed to be posted for this asset. And we execute here. and see the message in the bottom. Operation completed successfully. We have done a depreciation run. We close on it. If I go to asset master data, if you go to AS08, which is our asset, and then we saw here that this is my asset, this is depreciation, is vehicle on this date. My total acquisition value is 6 lakhs. Ordinary depreciation is 58,000 in this year total. If I go to values here, so we saw 6 lakhs. If I go to depreciation, now in the month of September, we had a planned 8,333, and then we have a posted 8,333. So that basically means we have been able to post 8,033 depreciation for month of September. This was automatic depreciation. We didn't do manually, we did automatically. So automatically 8,333 amount of depreciation has been posted in the system. And then depreciation run, we saw it. You can also do the retirement of the fixed asset. You can sell it. So if you go back here in the retirement, you can sell this, you can scrap it, you can select the asset you want, and then you can see the total value, whatever the total value of this asset is. And you can sell it. Operation completed successfully. After selling, if you go to general retirement, so that is where we see here my debit, my credit. Retirement revenue this much, retirement clearing this much, motor vehicle value was this much. So there is a net loss. And if I go back to my asset master data, if I check this asset here, is 0 fixed asset. Now this asset become inactive because we sold it out. It was active. Now this asset is inactive. And after sold out, my asset values, net value, and every other value become 0, 0, 0, 0, 0. This all become at the end of year 0. The total value, we recognize this, everything else become 0 because we sold it out. There are different reports, asset history reports and all that, which you can see in the system. So if you go to asset report here, so there's an asset history report. We can define different assets. So there is this is a asset AS08, historic value 0 now because we capitalization on this date, useful life this is, remaining life this, total start value. If I want to see asset transaction report, I can see asset transaction reports also. So this is my asset transactions, which we have done for asset. So we have done acquisition. This is the date. After that, we have done the retirement. And this is the date. So we can see the asset transaction report, also different business transactions, which we have done. Yep. So that's about to run through a cycle of asset. Thank you, everyone.
Dilipji, are you done with your presentation?
Yeah. I targeted 1 hour.
Okay, thanks Dilipji for the excellent presentation. The information that you have shared is very valuable. Now, before I go to the question and answer session, I would like to inform the participants that in case they wanted to see the complete demo of SAP Business One, please do let us know. We will request Dilipji and his team to make a demo to the interested participants. Are the participants who are working in different companies. If they want to see a demo of SAP Business One, please do let us know. You can drop a message to me on the message box, or you have my WhatsApp number. You can WhatsApp me also. We can request Dilipji, to make a demo for those companies or those participants who are interested in knowing more about SAP Business One. So now coming to question and answer session, I want to ask you one thing. How can we treat assets under construction? Because normally we show it as a separate item in the balance sheet. This is a separate class, asset class. So how we treat the assets under construction?
In asset under construction, basically in SAP handle as a different asset class. And then, so like a machines is one asset class and vehicle another asset class, building is another class, and under construction are another asset class. So it is handled using different asset class.
Okay, sir, we understand, 1 minute. Pankaj ji. Hello, Amrinder ji. Hello. Amrinder ji, can you hear me?
Yes, sir.
Yeah. Can you unmute the participants, because there are a few participants who would like to ask few questions. Hello.
Yeah.
Omkar ji, can you hear me? Hello. There is one participant, Mr. Omkar. His question is, when you were discussing about the asset life, he was asking me whether the asset life is for the management books or statutory books. Because, in few companies, definitely they keep, the asset life different for the management purpose and for the statutory purpose.
Correct. That is why I mentioned you can define different books. Like main book is our for our primary regions, and apart from the main book, you can have other books also. So like for taxes, different books. For our internal reporting, there is another book. So you can have in SAP that is called different depreciation types or depreciation areas. In that, you can define different type of books, and you can run differently for different purposes.
Okay. So we can have two separate set of books, right? One for the management and other one for the statutory one.
You can even have more than two also.
Okay. Thank you so much. Okay, Mr. Vardhaman, he wants to ask one question. He's asking, what is the difference between SLM and SLM period control?
That is more of an accounting principle. If you go to your accounting book, just Google it. So you will find it. This is nothing to do with SAP. It's more of an different depreciation method which are there.
Okay. Mr. Dharmender, you can ask your question directly. Hello, Mr. Dharmender. Hello. Amrinder ji.
Yes, sir.
The participants, they are putting their questions, but I think they are not able to hear us.
Good afternoon, sir. Can you hear me? I'm one of the participants.
Yeah, who is this?
This is Ram Babu from Doha, Qatar.
Mr. Ram Babu from Qatar. How are you? Long time.
Fine, thank you, sir. Can I have some questions? Can I ask to the presenter directly
please go ahead.
With your kind permission?
Yeah, please go ahead.
Good afternoon, sir. It was a wonderful session. I had an opportunity to participate in your last session as well as today when I was having a quick chat with Mr. Rao. This session is going on, wanted to join. Thank you very much for that, Mr. Rao. My quick question is, I understand from your last and current presentation SAP B1, we are mainly aiming for the SME kind of business entities which have multiple group of business like, for example, real estate, construction, contracting with the standard domain business trading. In that cases, and from your today's presentation, it's more clear though about to ask. We can maintain both main books for the management accounting as well as local statutory requirement. It was a very useful information indeed. In this context, I would like to ask, do you have any your SAP associated B1 partners who are currently based in Doha or Qatar? How you can help us? Thank you very much.
So first of all, thank you very much for your question. So see, let me give a little bit of this SAP Business One versus SAP S4 HANA, because it's a kind of a very relevant question, and sometimes for a lot of people it is confusing also. So obviously we are all business people and accounting experts and professionals. So that is so based upon that, we all know SAP, and then SAP, as we know, is pretty widely used in the world and all that. The problem which SAP had was, and that was a problem, let me tell you that way, because it was not affordable. So affordability for the mid-market companies was a problem. Okay, if you are a Pepsi, if you are a Coca-Cola, if you are a Apple or Samsung, you know, you can spend millions, that's not a problem. I remember at the first time when I did my implementation in India, it was, I was associated with Indian Oil. Now, Indian Oil, the first budget for SAP implementation with was, 200 crores. Now, 200 crore for Indian Oil may be a peanut, but for most mid-market company, it is a lot of money. Correct. So that is where this SAP had a problem, that if you are looking a proper ERP, which is good ERP with all the functions and core function, and they need something which is fit into their budget, not only fit in the budget, but also a global product from a large corporation. Exactly. So keeping the view of that, SAP in 2004, about 18 years now, come up with this product called SAP Business One. So it has all those different products. If you see here in SAP B1, so we have all these 16, 18 different products, and it's easily, and it's also simpler product, means it doesn't have that complexity of that SAP R3, because that was, so SAP R3 in a way had two problems, if I say. One was the cost and affordability, and the second one was the problem of complexity, because a small, medium, mid-sized company, their users are not that very highly qualified, and they don't need a very complex solution. They cannot wait like 1 year to implement and all that. So that's why SAP B1 was introduced, keeping in the view of these two parameters. If I answer your question.
Excellent, sir. I got it.
Okay.
Yeah.
Okay.
So sorry for a few seconds. Hello.
Yeah.
So having said that, yeah, I got a clear picture of the purpose of B1 compared to HANA. So in this B1, as we discussed, I can understand for SME, small and medium enterprises, which exactly they're addressing HANA R3, taking into consideration in mind. So what will approximate the software ERP implementation in terms of value, kind of indicative in terms of Indian rupees or in US dollar, if you share, it will help us to, we are like one of my clients is planning to go for that, and I've been in that project, implementation team. In that context, I thought it have more relevance to raise this point here to the speaker.
Absolutely. See, we will share our experience, Kabir's experience. We have done implementation in numerous countries. We have done in India, we have done in Bangladesh, and a lot of Western African country. We have done in Middle East, especially Saudi Arabia, US, and Vietnam, and all that. So we have done numerous countries. And also, if we talk of the size of the companies, like in India, we have a company as small as, like, if you put in Indian terms, like a 10 crore, 20 crore company, which is like, 20 people or 15 people, 20, 30 people company. We also have a very large companies also. So like we just implemented one oil and gas company in Nigeria. Now they have around 1,500 people, and they're pretty complex business with oil and gas and oil business and all that. And they also implemented SAP Business One. So SAP Business One can go from as a small 10, 20 crore company to a company which has like 1,500 employees. So there is a very broad range. Now the cost has two dimensions. The one cost is license cost, and second, the implementation cost. Now, it is very difficult to mention, but I can tell you that, like in India, when we talk about a company which is 10, 20 crore company, you can implement that in few lakhs, because they just need few licenses, and it can be done in few weeks, and they're done with it. So it can be done in few lakhs. So this is not like a 200 crores or 500 crores and all that. It is always, if I talk in Indian terms, is in lakhs or in thousands. It is not in millions. So if I give it, but if you have any prospect or something, we can, we have something called prospect evaluation sheet, in which we can get some basic data, and within few hours, we can give you indicative cost also. But I'm giving some broad guidelines right now. So it is not in crores, it's not in millions, it is always in thousands, and it is always in lakhs if we talk in Indian context.
Yeah, thank you very much, sir. I got it. So maybe probably after this session, we'll have to have one-to-one interaction to Mr. Rao. So thank you very much for that.
Absolutely. That's not a problem.
Thank you very much, sir. Indeed.
Absolutely.
Thank you, Mr. Rambabu. What I'm saying, once the session is complete, you can, message me. Then, if required, I will connect you to Dilip ji and see.
Thank you. Thank you so much. Okay.
Okay.
Yeah.
Sir, one next question, Mr. Vardhaman. He is asking a question relating to capital. He's asking a question relating to capitalization. If capitalization date has been deleted incorrectly, is there a way to change it?
In SAP, you cannot delete it. It doesn't allow you to delete it. Actually, once you do capitalization, then the date actually gray out. It doesn't allow you to change.
Okay.
There's an automatic lock from the system on that.
Okay. Sir, one more question. We understand SAP has introduced new asset accounting in SAP S4 Hana Finance, which I understand is an advanced and user-friendly and have more features. Though it is out of context, I'm asking, could you please let us know what are the new features covered in SAP S4 Hana, which is not covered in SAP B1?
See, there are two different products, B1 and S4 Hana, because I know both, right? I do. My personal expertise is more on S4 Hana, by the way, rather than B1.
Oh, okay.
So yeah, so if I talk, my personal 24 years is all on S4 Hana, or R3 it used to be called. See, the point is, if I compare the comparison between B1 and S4 Hana as a product doesn't exist, because they're two different things. The point is, S4 Hana is definitely a world-class product. There's absolutely no question. There's such a functionality. If you talk about asset accounting, and I do teach asset accounting in S4 Hana also, Mr. Rao, it takes me minimum to minimum, at least 20 hours to cover the whole asset accounting only. It's so involved. But SAP B1, I could run through most of it. I mean, there are many other virtual accounting, many things. I didn't cover everything today, but in 1 hour, I could run most of it. Now that is where the judgment comes. Like if I'm a company, the mid-market, do I really need that complexity? Do I really need to buy an elephant when I don't need it? So if I say S/4HANA, the good news and bad news with S/4HANA is that it is very, very robust SAP software, absolutely. But that robustness, that comprehensiveness also inherently means complexity. And that complexity inherently means longer duration of implementation. That inherently basically means that you end up spending more money. So they are all connected. So B1 is much more simpler, and that is the good thing. And that is why it is less costly. And that is why it can be used by the mid-market in very shorter period of time.
Sir, one quick question in continuation to the previous participant, like SAP does not allow change. Can I ask one sub-question on that, sir, for my academic interest?
Yeah, please.
Yeah, if by chance it does not allow the gray, I understand from the internal control and check point of view. So what is the way forward to pass the correct entry? You mean like passing as good as journal JV reversal? You mean the solution?
I didn't understand your question. Your voice not clear to me, please.
Sorry. SAP does not allow to change. We have been discussing about any wrong date mentioned in the capex, capitalization.
Correct.
So chance if they enter the entry, what is the way forward to rectification? As good as passing normal rectification JV, journal entry, you mean, right?
Yeah. So in SAP,
yeah,
not only asset accounting or asset transaction.
Any
financial transaction once post, any financial transaction, I'm making a very broad statement.
Yeah.
Even you post, let us say, vendor invoice, and then create a journal entry for crediting vendor and debiting this. Once a financial document has been posted, it cannot be changed. Means you can put comment and all that. So no financial document can ever be changed. You can always do reversal, and then you can repost with the correct date and correct amount. So if user error happens, then the reversal is an option, and then reversal actually create a new document with reference to the old document. So there is a whole change history.
You mean I will have a transaction evidence for the audit review or general review? I got it. Perfect. All right. Got it.
Yes. And that is true for all financial transactions in SAP.
I got it. Got it. So in the SAP itself, it is designed in such a way you have a part of internal check and control process. Like you cannot unpost, rather you can reverse or pass as many entries, but it will be all the tracking purpose in the ledger or transaction. The level is there across the SAP in general. Any financial chart of accounts heating transaction is in such a way designed from background SQL. Got it. Wonderful.
Absolutely.
Yeah. From audit point of view, I'm satisfied.
Welcome.
Thank you.
Okay, thank you. Sir, Mr. Omkar from Kingdom of Bahrain, he's asking one question on transfer of assets. His question is that I have assets of machine, and considering this is a big machine which is having a small component, after a certain year, I want to transfer part of the assets to a different location. Do I need to create a new asset into the system and show transfer?
So transfer does few things. The one thing which asset does is basically that when I was creating asset master, there was a location. So you can specify that, okay, this asset, this machine is in location, Mumbai. And then from Mumbai location, I want to transfer it to, let us say, location in Bangalore. So that is the one transfer of asset from location to location. So that is the one example. Sometimes what happens is that you created the wrong classification of the asset. It should not be classification A, it should be item group, asset group this, not this asset group. So there was an error. So now I want to do a transfer from asset group A to asset group B. So in that case also you can do transfer as well. You can also, as we talk about, apart from the depreciation of value, you can also do appreciation of value also. For whatever reason, that initial value which we posted was 6 lakh, but it should have been 7 lakh. So you can post a depreciation. You can also post appreciation of the value also. You can also post a credit memo. Like for example, let's say you have your vehicle, and that vehicle got into accident, and then there's just drastic reduction in the value because this vehicle is totaled out or scrapped. So you can post the credit memo also, and you can do scrapping as well. So that those kind of appreciation, depreciation, credit memo, selling of the appreciation, scrapping of transfer of the location, transfer of the group, all those different functions can be performed on asset.
Okay. Thank you. Sir, one more question. When you are making the presentation in the asset master date, there was a separate column for barcode.
Correct.
Okay, so you mean to say when we do the asset tagging and all, that time the barcode will be reflected there?
You can do barcode. You can also do actually serialization also. So you can associate that to serial number as well. And you can associate to barcode also, because barcode actually has what? Barcode normally has a serial number on it.
Okay.
So the idea is that in case of barcode, you can have a serial number, and serial number or batch number or item code number can be also published on the barcode. Barcode could be one-dimensional barcode, it could be two-dimensional barcode, it could be QR code also.
Okay, but then we need to have a separate asset tracking system which needs to be linked with SAP B1 asset module, right?
A lot of company use something called scanners. So SAP allow you to integrate with a different type of, like you go to mall, they will scan your product. Same way in SAP B1, you can also you can do printing of the barcode. Secondly, you can also basically scan the movement of the asset using barcode.
Okay. Thank you. Sir, one question. What is group asset in SAP? When we will use this?
Group basically means further classification. Multiple ways it can be used. So let us take an example of a vehicle. So I will give an example from my past experiences. So let's say we talk about the vehicle, but now the vehicle, you might have a different groupings within the vehicle. So like in the vehicle, you can say, I have a, 6-foot trucks. I have a 3-foot trucks. I have a delivery trucks. I have that group of trucks. Within the vehicle, you have a truck is one group. You have a motor car, another group. You have a, two-wheeler, another group. So based upon, if you take an example of the vehicle, you can define vehicle class into multiple different groups, and you can actually have a hierarchy of those groups also. So people can use that actually for the reporting and analytic purposes, that how many different type of assets and class of asset is one part. This is the grouping of asset for the reporting analytic purposes.
Okay. Sir, one last question. What is the chart of depreciation? How does it differ from the chart of accounts?
No, chart of account is different. A chart of account is basically where you have a different your GL account assigned to it, which we talked about in the past. So you have all these different GL. So that is the chart of account. Chart of account is just a schema of different general ledgers assigned to it. Your expense account, your asset account, liability account, balance sheet account, this account, that account. So all this account is there in chart of account. Depreciation is basically where you're linking few things, which I mentioned in the beginning. So like you were talking about, I want to have a different depreciation. One is the main book, and the second one is a tax book. Third one is I want to have it for internal purposes. And then you can put some other default also, that okay, for this I have a 72 month. All that is defined as a part of your depreciation chart of account. That is a different concept.
Okay. Okay. Thank you, sir. Thank you for answering all the questions.
Yeah.
Now, Amrinder ji. Hello, Amrinder ji.
Yes, sir.
Yeah, can you hear me? Yeah. Now I would just request our ISMA President Amrinder ji to present a certificate of recognition on the behalf of ISMA to Dilip ji.
Yeah. So first of all, thank you so much, Dilip ji, for this wonderful enriching session on SAP Business One, and
Welcome.
particularly focusing on asset accounting today. And we already had, previous two sessions, wonderful two sessions, cost accounting and financial accounting. And we are hoping in the coming time we'll align with more topic. So in behalf of ISMA, I would like to present you a certificate of recognition. This is just a token of moment, a small token from our side. So give me 1 second. So this is for our side, sir. Thanks so much again.
Thank you. Thank you.
Okay, and now I would request Dr. Amrinder ji to give his concluding remarks and vote of thanks.
Yeah. So obviously, before that, I would like to tell something about ISMA. And ISMA, for this audience, this wonderful audience today. So we are basically representing some management accounting professionals, not only the person who is holding CMA certificate, but person basically keeping interest in management accounting, either from any profession. So ISMA is basically represent society of these management accounting professional of India, not only in India, in fact, all over the world, right? And basically, the vision of ISMA is just to integrate some accounting to make management accounting profession the most respected and valued profession of the world, right? And for today, extending the vote of thanks. So first of all, we have very extremely useful evening talk on SAP Business Accounting, SAP Business One, emphasizing particularly on asset accounting module. So any event cannot be successful without wonderful audience. So I take this opportunity to extend most sincere thanks to all of our participants who participants available today, and make this even more successful. Even participants not from India, I see the participants from some other countries. So thank you all participants. You have spared your time for this session. And then I will also like to my special thanks to Dilip ji. And because without the speaker, this particular session cannot be, uh, uh, keeping any success. So, and then further I would like to extend my vote of thanks to the moderator, our own vice president, Mr. Rao. And there is a wonderful moderation of this program. Thank you, Mr. Rao, for this wonderful event. And then my last word of thanks to all of us, and as a team, as a audience, as a ISMA, some representatives like Pankaj ji, right? And then some of the, behind from ISMA, and then some people from SAP business team, right? So thank you all of you for this wonderful event. So thanks again.
Thank you. Thank you, Dilip ji. Now we are ending this session.
Thank you very much.
Thank you, sir. Thank you once again.
Thank you, sir. Thank you very much.
Okay, I end this session, right? Thank you. Bye.